Hey San Diego, welcome back to the Apartment Geek Weekly. I'm your host Chris Robinson, and I'm excited for topic number 2 of our new itinerary, and it's basically the stock market versus real estate. Okay, so you've got money, you've got a pile of money, you put it in the stock market and move it around, or you go in and out, or maybe you buy stuff and hold it, or do you put that money, same amount, in as a down payment on a 3 unit, 4 unit, 8plex, 20 unit, whatever it may be, depending on your size. I've seen a lot of really interesting stuff in 19 years of being in apartment real estate, investment real estate, I call it, or income property. Now, I've never been really a stock guy. Back, and I'm going to kind of show my cards here, back until, so let's go pre-COVID, so February, March of last year, 2020. Before COVID, before everything really shut down, I had maybe 200K in different accounts, whether it was an investment brokerage account or a SEP IRA, which I don't really care for because I don't want to wait till I'm older to spend my money and have fun. I want to do it when I'm fit and have the physical body to go have fun and enjoy it. So the whole IRA thing, I'm a little I'm not a huge fan on. That's a side note. But the stock thing is really interesting because I've never been too into it. A couple $100,000, whatever. And then March 13 hit. I think it was Friday the 13th last year when we had the kind of everything hit the fan. The lockdown was happening. And if you look at the trend on the stocks, that's really when things plummeted. The hotel, a lot of the hotels and the airlines and the stuff that we know has struggled. And a couple different advisors that I know, they're really friends. One of them I went to Santa Barbara with. I said, I remember the Warren Buffett line, be greedy when everybody's fearful, and fearful when everybody's greedy. And I think we really need to keep that top of mind, especially now. But back then I go, you know what? This is time to pounce. And I put a ton of money into MGM and Southwest and a bunch of different stocks. I won't even go into it. But, and then over the course of last year, I shouldn't have done anything, but I kind of got scared. I pulled some money out, and it's holistically done well, looking back to today, early February of the next, almost a year later. But this is the thing with the stock market, is it kind of takes your psychology out of the real estate game. And that's the one real major point I wanted to make here, is when you're in the stocks, I feel like it's kind of a get in and get out game. It almost reminds me of going into different markets and buying real estate there. It's almost like you want to get in, you want to take advantage of some opportunity, and then get out. It's almost like the blackjack table in Vegas. If you don't want to stay there for 10 hours, it's kind of fun. Maybe you go for a couple hours. If you make a couple $100 or whatever, then you get up and leave. But the one thing that I've experienced with myself is being in the stock market and kind of having a large amount of money in there. I won't go into details, but a lot of capital. I've been not focused as much on real estate opportunities, and I don't like that. And I think real estate, I always preach you should be buying in every market. So buy a deal a year. Even if things seem crazy expensive, you still need to be looking for opportunities where you can capitalize on those. And frankly, I haven't been doing that because I've just been so focused on, I have this money in the stock market and I really need to kind of I'm trying to get it up to a certain amount, and it's completely out of my control, which I don't like. And I'm not going to go into that. We know that real estate, when we own real estate, we can go paint the building and raise rents within reason now with rent control, but we have the control to go manage it and deal with it, and we can go touch it. So I don't think there's any comparison, frankly, between real estate and stocks. If you do stock market, I think it's more get in and get out. And I now have to figure out how to get out of the stock market because I've made some gains, unrealized, but on paper, some gains. And now it's like, I want to get back into units, because if you go to a cocktail party with a bunch of gray-haired old people and you ask them how they made their wealth, 9 out of 10 people will say real estate. If they don't say real estate, then maybe there's some pharmaceuticals or biomed or bioscience or something like that, maybe. Or somebody invented something or made a tech company and sold it. But really big money is made in real estate typically. The stock market is a gamble, and I just don't like that as a long-term game. And I think it's one of those things that's a temporary deal. You see something like the COVID happen, which is horrible, but maybe there's a silver lining where people can make some capital and they can turn 20 grand to 30 or 40 or 500,000 to 700, 800, $1 million bucks. But I think once you do that, we have to realize, and I do especially, is to exit the stock market, pay some tax, whatever, and get back into income property. We all know I'm a huge fan of the apartments in San Diego. And the big thing with the apartments is the leverage factor. We talked about this last week with seller financing. The more leverage you can get, the better. And that's where you're really going to make your long-term wealth creation is economics 101. You're using other people's money. And if we go into a recession, an inflationary market, and the dollar weakens, we know that debt is our best friend. It's literally like sitting on gold, all that debt. Perfect hedge, basically, hedge against inflation. So that's my 2 cents. Stock market's great, but I think it's kind of like legalized gambling, and we see how things can go up and down so fast. And I think the master psychology is like, play around with it, maybe get in if you see some value there, but always keep your eye on the real estate deals, whether it's the brokers you talk to, me, LoopNet, anything you look at. I would really stay finger on the pulse with trying to pick up more units and refinance when you have an opportunity, or if you have a building that you kind of squeeze the lemon, look at value on that, because apartment values are still, it's so wild, but they're as high as they've ever been. They're higher than last year, and they're still, I mean, it's really strong, the market and the numbers. And if you have something you've squeezed, then maybe it's time to look at the value of that and selling that and going into a 1031 exchange and buying something that's bigger.